Hello everyone, welcome to Smart Investing with Philip. This session of today is obviously to make the key market indexes are and where I think the market is going to move and what to watch for if you really are worried about market crashes. So let's go. Let's start first with QQQ. If you go back to the previous video I was making about QQQ, you know that I was talking about the 200 moving average of 492. I was talking about that level of 510. And I was talking about the 541. You remember I say if it just go and touch 441, whether they're going to break through or they're going to retrace. Then if it traces, it has to retrace first to 510, which actually it did. And then it actually broke through 510 to go to the lowest limit that I was talking about of 495. And from that level, it rebounded back to 510. 510 is a very key support level for QQQ. And then it actually almost reached the 200 moving average of 492. So I would say that a lot of the steam for the QQQ has been taken out of the market. Now that doesn't mean that the market cannot crash again and go even test again the 200 moving average and probably break through to the level of 400 and 440. But I don't think this is the key. I don't think this is the key scenario here that I am waiting for, because otherwise, if it goes down to the level of 440, you have quite what we call a bearish market, because it's minus 20% from the top. And I don't think at all this is what we're going to see, at least not with what the economic indicators are showing and what the interest rate movement is going to have an impact on the market. Because if the rate decrease because the employment is increasing, we expect the employment to decrease, the economy to slow down, then I don't think that you're going to see a major crash to 20%. It could be a further correction and retest of the 200 moving average at 490. Then you will have a correction of more or less 10%, which is very good. I mean, 10% is quite a good discount on the QQQ, and it's something very normal that we've seen in 2024. So again, I don't see this market. It's probably that it's going to range bound a bit and let's move back and we test the all-time high. So now if we look at especially that we are on the oversold, we are close to the oversold limit. And I told you that usually when you reach the 30, which actually we did, you see here, we did touch the 30 on the 27th of February. And usually you see when you touch that 30, it rebounds. Okay, it rebounds from that point. The market rebound, and after that maybe it oscillate and continue its movement on the way back, on the way up. Now if we look at the S&P 500, I show you the key level to watch. 613. If it doesn't break 613, then it will retest the 589, which actually it did. It went through just slightly. It wanted to retest the 575, which I thought it would, maybe probably the 200 moving average, but it didn't, which really showed that the S&P 500 and the market overall is very strong. You see, it actually only pulled back to 5%. 5% is nothing in the market. And I see a lot of panic because, of course, this 5% is the overall market, but if you look at very high growth and trendy and momentum trades, momentum names, These names have pulled back a lot, some of them 30%, 40%, some of them more. That's why you see a lot of movement and panic, and those names are mostly retail names. So that's why you see a lot of panic in the market and a lot of selling pressure, because these retail investors, they invest in a momentum stock, and then when it crashes, then in panic they sell. Then they never win. They never win this game. So again, it touched the 27, it touched the 30 limits, which it did on the past also, and really from there it rebounded slightly. Then I think it rebounded, you see, it touched 27 limit, then it rebounded back to the level of 493. As long as we stay above 590, I don't think that we're gonna see another pullback to the level of 575. But again, we have to be careful of any shock that can happen to the market. There is the employment figures, the inflation figures, anything that can impact the economy due to the tariffs and all these geopolitical problems. So, but again, I don't see at all with the setup we can see here. I don't see at all that the S&P 500 is very bearish. What it has been doing, it has been trading within its trading range of 580 and 613. You can see clearly here what the market has been doing. See? It's really trading between these two limits since November 2024. It hasn't really moved from that level, so we are close to 4 months. The market didn't do anything. So again, we have to be patient. It's a range-bound market, and it's not at all a bearish market. I don't think so. It tried to correct meaningfully, but it didn't manage to. IWM, we talked about this one, very frustrating. It actually went lower than the lower limit of the upside channel that I was talking about to you, and you can see it broke through that lower limit. It retested one of the key level of 210, and it rebounded from there to that lower limit. So as long as it stayed there, maybe it will go back to its normal channel, because sometimes, it tried to break out of that channel, then it retests the 200, then it go back to the channel. And that's why what it is doing again this time. I don't see the IWM crashing from here. I don't see at all. I don't see that it's going to retest the 194 or the 200 level. I don't think at all. You see, we are already on the oversold territory at 30. And that is not good. That is good because there is no steam or pressure left in the IWM index. Small cap are not at all overbought. They are not at all on pressure from the valuation standpoint, and they have nothing to fear for major correction. I don't think so. So IWM, we are quite safe on this one. I'm heavily invested in IWM. I'm very frustrated because I was trapped in the fake breakout. But never mind, it will come back. But it takes time to come back. It really still underperformed massively the rest of the market on the US equity market. So let's see now what the Max 7 are doing. Max 7, we talked about it again, and it exactly did what I was expecting. If you go back to the previous video, I told you that it was range bounding on a descending triangle features, and if it breaks this triangle, that it will retest the level of 52, and after that the level of 50. And this is exactly what the Max 7 have done. They tested it first at 52, it went through, and it tested the 50. Now it seems that it wants to hold the level of 50. 50 is a major support because you can see it was the top of the upside move back in 2024. Okay, so if it breaks that 50 level, then we're going to retest the 200 moving average of 49. But again, if you see the volume on the sell side, the volume has been very low, so there is not much conviction on the sell pressure of the Max 7. So far, the Max 7 has corrected more or less 15% on an aggregate, 15% discount on the Max 7. Bearing in mind they are the strongest company in the world, and the valuation are not so high as a lot of people expect. We are talking about 30, 35 PE, some of them even on the 20s, and we also look for 30, 35 earning growth potential. So the forward PE for this company and Max 7 is not exaggerated at all. It's not in a bubble territory for sure. So if you look at individual name Amazon, I told you that if it went through 215, it will go through and retest the level of 210. I thought it will retest the 200 level, and after that rebound from there, but it seems like it stopped short of that at 205, then it rebounded. So Amazon, it broke its ascending channel, because you see the ascending channel is the yellow line. It broke significantly its ascending channel, so I would expect Amazon to touch 200, which is a coincidence with the 200 moving average. So I don't expect Amazon to go lower than its 200 moving average. It's a very strong company, strong prospect, not very expensive, I don't think so. Good earning growth prospect, good margin expansion prospect. One of the cheapest of the Max 7 actually. So definitely what I'm doing is I'm watching the 200 level. If it touches the 200 level, I'm going to sell puts. I'm going to sell puts to make some income at the same time, but I got a stock cheaper. But don't expect the stock to retest the level of 183. I don't think so. It's a major support. Look at the volume of 185. But I don't think it will do that. I think it will retest probably the 200. But from the 200 it will move back. But again, nothing is guaranteed, but this is what I see, because you're already on the 30 on the RSI. RSI has touched the 30. So from there it will rebound. You see, on the previous crash here, back in 2024, it's actually touching the 30 on the RSI was the bottom of the correction. Then it rebounded very sharply. Google, quite a frustrating stock, because from all-time high it's corrected quite a lot. You see, corrected more than 20%. I think it will retest the 165 level. 165 level is definitely the level you need to watch out. 165 definitely is the way that they are going to do with Google. They will retest the 165. If they retest the 165, I will also sell a put on Google. I don't like too much Google for the long-term name, but it's for another story and another video. Here I'm just talking about short-term to medium-term view on Google and where to expect the key support level. 165 definitely, and it almost touched the 165. So it's probably that the market think it already tested 165, because it was at 166. You see? Maybe from here now, it's going to range bound and again go back to all-time high. Meta didn't correct much, still holding above its 55 moving average, so no problem. Netflix the same, still above its 55 moving average. NVDA, I told you NVDA, be careful, Look back to my video on NVIDIA. I told you that it will break its ascending channel, the yellow line. And if it breaks its ascending channel, it will retest the 200 moving average. And if it breaks the 200 moving average, it will go and retest the 110 level, you know. But it actually went to 112, which is very close to the level I was expecting, 110. And the scary thing about this is that it does it despite that it has beat both the earnings and the sales estimates. And the balance sheet is as strong as it can be, you know. But there is a lot of issue with the margin contractions. A lot of people are skeptical that they can still continue to grow as fast as it did in the past. Of course, the growth is decelerating and the stock is priced to perfection. But if you look something stable, you don't look for the same type of return that it did in the past, it's a very good stock to start to sell put. I would sell put today if I wanted to sell put on NVIDIA. Selling put on NVIDIA on 110 probably is a good level to sell put, you know. And acquiring NVIDIA on the 110 I think is a good price. If you look at the chart, the stock has done nothing at all since June 2024, so almost like 8 months. 8 months the stock has not done anything. It will continue to range band. Don't expect the stock to rally like crazy. I don't think there is any steam left in the stock. Look at the RSI, it's pretty neutral. Of course, it's slightly below 50, but it's not at the oversold level at all. So don't expect anything with NVIDIA. Otherwise, AMD is a stock I know a lot of people are following. AMD, it's reaching a key support level on the Fibonacci retracement. You see the Fibonacci 0.78 retracement has been probably touched or closely touched. So I would say that the stock will never go lower than 95. If it goes lower than 95, then it's a full retracement back to 2023. I don't think we're going to see that. That means it erased all the upside from the low of 2023. That would be one of the only stock that does that on a major company that is profitable, very good growth prospect, and a very low PE and forward PE. We are around the control point of $108, slightly below, but you see the volume is very supportive here for AMD. What I have done, because I've got already quite significant investment for AMD, I've topped up my holding, and I have DCA my holdings. So I bought 100 shares at more or less $100. SMCI, one of the stock I have also. It seems to want to stabilize on the 55 moving average, which is quite good. Of course, it retraced back even after they released the report. Then we didn't see any rally coming. Everybody was expecting the rally, including me, but that didn't happen. But having said that, it's a very strong fundamental company. Look at the balance sheet. And now they have published the report. Everything is in order. There is nothing fraudulent about the balance sheet and the income statement. So I think it's a matter of time before the stock regain its footing and probably we test again the 70. If you talk about the people who are waiting or are just being scared about the market crash, you have to understand the market crash happened for two main reasons. The first reason a market crash happened, whether you look in 2000, 2008, 2020, 2022, these major crashes happen for two reasons only, nothing else. The first reason is when the rate increased sharply. So the Fed is increasing the rate sharply. Then you can expect a market crash. Because stock don't like when the rate increases very sharply. So that's one scenario. Do you really expect the rate to increase sharply from here? I don't think so. Again, the Fed is not at all in the mood to increase rate at all, you know? Nothing in a macro or the interest rate dynamic, employment, growth, inflation, nothing warrants that the Fed is going to increase interest rate anytime soon, at least not in 2025, for sure, 100%. The second reason there is a market crash, and the second reason only, is when you have a recession. So the economy is badly impacted and you have a contraction in the GDP. You've had that in 2020, you've had that in 2008, and you have that in 2020 with the COVID. The economy contracted sharply. But do you see any fear of recession this year? This year, of course, you expect a lot of unemployment for the public sector. You expect maybe some challenges and some stumbling block with the tariff and geopolitical aspect of the world. But I don't see that in 2025 you're going to see a recession. Recession is something that takes time to build. It takes time to build a recession in the economy. You have to start to see the unemployment increase, and it will take months and months and months before both the employment increase, but also the employment rate increase. You have to see the consumer also suffering, and you have to see the GDP number going down slowly and slowly, months after months. Then maybe you're going to see a recession. But this is without the fact that if this happens, the Fed is going to reduce sharply the interest rate. And maybe this recession will not happen. Because don't forget, we still have an interest rate of 4.5%. 4.25%. So there are still room to reduce sharply the interest rate and to stimulate the economy. So the Fed has a lot of tools to stimulate the economy, injecting liquidity, reducing the rate sharply before we even see any recession coming. So I don't see, honestly, there is nothing as such thing as guarantee in the stock market and the economy. But with all the probability that we see a recession in 2025 is probably less than 5 and 10%. I would say even 5%, you know. I don't see a recession coming at all. And recession, I told you, is only for two reasons. Interest rate going up sharply or the economy collapsing or decelerating sharply also. And none of these two is happening or will happen in the short term or medium term. Maybe 2026, we will see. We will see if this happens, the interest rate will reduce, and we will see what the Fed is going to do, whether they do it aggressively or not, and how the economy is going to react with a sharp decrease of interest rate. But bear in mind, if the Fed increase interest rate from 25 to 3% or 2%, the market will go up because the market loves interest rates to go lower and much lower. So you see, it's very complicated. But from this level today, when I look at the QQQ, SPY, IWM, when I look at TLT, I don't see any major crash coming in the indices. So I think it's just a normal correction of 5 and 10%. 5% for the S&P 500, 10% for the QQQ, and nothing more. So don't panic. Okay? So I hope you have enjoyed this video. Please share this video with a lot of people so it can help to grow this channel. Subscribe and push the like button so it can also help the algorithm to push this channel further to other people. Thanks so much and have a good day.